Good morning, everyone, and thank you for taking the time of your busy schedules today to join our webinar, which is Digital FP&A Provides Certainty in Uncertain Times. My name is Spiros Aragudas, and I'm a Profit and Director here in the UK, and I will be introducing today's presentation. Just a couple of housekeeping points before we start. Can I ask that everyone goes on mute, please, until the end, where you will get an opportunity to ask questions. You can do that either by raising your hand, which is using the yellow hand at the bottom of the screen there, or if you prefer, you could put your question in the chat box and we can reply to it at the end. We are recording today's presentation, and we'll be circulating a copy of the recording at the end after the meeting. We'll try and keep to time, so today's call is scheduled to take 30 minutes. And so without any further delay, it gives me great pleasure to introduce you to today's presenter, Steve Benham. Steve, over to you.
Thank you, Spiros. Good morning, everybody, and thank you for joining. I'm a director of Profit and we are an Anaplan partner. And our mission in life really is to help our clients improve the efficiency of FP&A processes, and also to improve the value that they provide, which is often a bit more difficult to measure. Just a quick word about myself. As you can see from this sort of very summarized CV, I'm a qualified accountant. I've had about 20 years in line accounting, including about 10 years as CFO of mainly venture capital backed companies. And then I decided to move into enterprise performance management roles, which have been a whole range of things, largely around delivery and practice management, practice lead. But there's also been a number of commercial roles in there, including running the whole global distributor network for one of the software companies that I've worked for. What are we going to cover today? So we're going to talk about FP&A efficiency. By that, really, that translates as process improvement. And we're going to talk about FP&A value, where we can get additional value for your business from improving the processes and using technology. One of the things I like to promote is I believe that the biggest value from improving FP&A processes comes from focus on the forecasting process, and I call that becoming a fortune teller. We'll have about 10 minutes or so for a software demonstration, a bit of time at the end for a case study, and then a little bit of time for some question and answer sessions. Okay, so what a good way to think about your finance team is to consider the roles that they genuinely perform. And we like to think of this in terms of finance departments which are traditional, those that are transitional in the gold, and those that are transformational, which are up in the green. Typically, a traditional finance department, they spend an enormous amount of time creating monthly results using spreadsheets. Sometimes they have a forecast, which is year to go, which is at its simplest just actual plus budget. And if they're ever, or when they're asked to do scenarios or forecasts, they're always under extreme time pressure and often have to use very poor data. And in order to generate any figures at all, they have to make some pretty unreliable assumptions. And I can remember being there in my CFO days. The process automator, the transitional, typically the finance processes have been automated. They're using some form of technology beyond Excel. But still, in particular, forecasting and scenarios are a real effort, largely because of the focus is still on producing month-end actuals. And then moving on to what I call the fortune teller role. Just excuse me, I'm going to move. I've got these photographs right in the middle of my screen. Moving on to the fortune teller role, the key thing here is that to move the focus of finance onto the outcomes. So if you think about it, business decisions are about the future, and therefore we should try and give management information which focuses on the future effect of the decision. More increasingly, we're seeing people with doing some predictive analysis. They're taking historical numbers and extrapolating them forward, or even sometimes people are now using AI if they've got enormous volumes of data. And we're also seeing that the siloed spreadsheets that do the sales and operational planning, which often don't make their way into finance, are now being moved onto more up-to-date technology and connected in real time to your financial forecasts. And finally, we see that our more transformational clients have a really good understanding of business process beyond FP&A processes, so they understand that, you know, what it takes in the business, the activity that goes on in the business to generate demand, and the activity that it takes to fulfill demand, just as examples. So what I'll show you today is that really to become transformational, and indeed even to become transitional, you really need to invest in a proper EPM platform, enterprise performance management platform, which and move away from spreadsheets, which really come with quite a lot of issues in enterprise-wide reporting. So let's focus on transformational first, and my drive, let's say, to help people become fortune tellers, to focus on forecasts and outcomes. Looking on the right-hand side, typically the core finance process that all roles perform is reporting historic performance, that's actuals. If you can get your forecasting process properly embedded, so that you're forecasting at least every quarter on a rolling basis to the planning horizon, and by planning horizon I mean, if you like, take a oil exploration industry, that might be 20, 30, 40 years hence. If you take an IT or a technology company, it might only be 2 or 3 years hence before the product set has to be refreshed. So if you have this sort of forecast as a baseline, and many companies are now updating a version of the forecast in real time with latest information, then using your latest forecast, it can form the basis for your next version of the plan, which in most businesses still do budgets. So there's a 12-month plan, let's say. And you can also respond rapidly to ad hoc requests for scenarios, say from the chief executive or the sales director or something like that. Let's take a look at what traditional often looks like in the next year plan, the budget process. And what you're seeing here is a very typical timescale of 5 months. Budgets still continue to take between 3 and 6 months sometimes to complete. There's an enormous amount of workload goes on in just building a budget workbook in Excel. And that's after having confirmed some top-down targets, maybe with the executive team. And maybe it's probably 2 to 3 months into the process before the budget is sort of circulated as a spreadsheet workbook to the rest of the company, and you ask departments or remote businesses to give their contribution. And then 4 months into the process, you maybe have a first draft that you can discuss with the CFO, and 5 or 6 months later, 5 or 6 months in, you may have board approval, or if you're unlucky, the board will throw it out and you have to go all through the process again, except you can't because you just don't have time. So this is typically supported by spreadsheet technology. There's high waste, as you can see in the box here. An enormous amount of manual effort goes on around the business. Spreadsheets are held in departmental silos, and that in turn leads to a lot of version control errors in the whole sort of planning process. And perhaps the most important thing is that finance spend across the whole company spend weeks and weeks and weeks of man days and effort preparing this, but they really have no time at all for proper analysis and running scenarios and sense testing the budget. If you compare this with what many of our clients are now achieving, instead of having 5 months, we now have 1 or 2 months. In fact, many clients are looking to do their planning in less than a month now. And the key to this is actually the technology, which allows you just to copy the latest forecast, for instance, and that's immediately your baseline to perhaps modify some top-down assumptions. You can have a quick review with the CFO before sending it out to get some contributions from around the business. Sometimes within about 2 weeks, but maybe even a week later, you can do that, which all means that your first draft ready for sort of review by the CFO is maybe the end of month 1. And then in month 2, you're going through some iterations with the board. So how do we achieve this? We achieve this with largely with technology. You need technology which allows you to do some real-time updates to a central data in real time. It needs to be cloud-based, really. It needs to be mobile enabled as well, so that the whole company can work when they're on the move. And this will then allow you, for instance, to have your review meetings virtually, and you can perhaps make changes to the plan in real time during a review meeting. And more than anything, the efficiency side of this is that data manipulation, once the data is in the system, is completely removed. There is no transfer of data from spreadsheet to spreadsheet and system to system. Okay, let's move on to a demonstration. I'm going to come out of the slideware just for a second. So what we have here is the typical finance processes. We have reporting performance against budget and actual. We have forecasting performance. We have develop plans and budgets, run scenarios, and loading and managing data. And data needs to be loaded for most of these other processes, so we've treated it separately. Underneath have we got the various steps that are in the process. So we have accelerators which cover all of these processes and reduce the implementation time substantially. Let's move to the first one and just talk about reporting monthly actuals. And what you can see here, this is a very summarized executive scorecard, financial scorecard. And we've got a summary P&L. We've got this is the month year to date, full year, and then actuals against budgets with variances. We've got P&L trends and a balance sheet. And underneath we have the cash flow forecasting. And as you can see, we have graphs for all of this. And if I select, I can then have filters for different versions. and I can select individual months. So let's maybe go to April. Okay, and as you can also see, we have the ability to put a commentary in here, and this commentary is attached to an individual month. So this is attached to May 20, and I can change this commentary on the fly like this. And I can also, that's just to prove that it is retained against the month. If I go to April month, there is no commentary in there. Which there is now, and I can go back to the May month where the commentary we had before is retained. So this can all be tailored. Obviously, very unlikely that this will be exactly the format that you would like in your business. However, the accelerator allows us to tailor this very, very quickly to how you want it to appear yourself. Similarly, we do have some detailed P&L and balance sheet and cash flow reports underneath, and we have the same principle of a monthly trend and actuals versus budget, and P&L, balance sheet and cash flow with the cash flow underneath there. And we also have then detailed sales analysis in this, where we can analyze sales. Again, this is out of the box in the accelerator. So we can analyze sales by department or for instance, legal entity. That could be legal entity, different operating companies. We can analyze, let's just put that back to all products. We can analyze by product, by customer, and by legal entity or sort of organization structure. So as you can see, if I, you can see the graphs modifying slightly when I select maybe one product there, and you could imagine that these reports are relatively easy to replicate for say gross margin analysis or product or customer contribution as well. Let's go back. So going back to our finance processes, we haven't got time today to go through all of these. So I'm going to just focus on scenarios. So this is the example here is actually of an energy company selling gas and electricity. We've got this waterfall graph here. So if you imagine maybe a scenario that happens to most CFOs, that you've exited your office and you've gone down to the coffee machine to get yourself a coffee, and the CEO comes along at the same time and says, "Oh, I'm glad I caught you. We've got a bit of a problem. One of our nuclear plants is out of commission, and we're going to have to rely on wind power. And actually, I think we might even have to buy electricity on the grid, off the market at half-hourly market rates. And I'm pretty sure that's going to affect our profitability. Do you think you could have a quick look at that and give me some idea of what it really is going to do to our profitability by tomorrow morning?" So because of the technology you've got, you can go to the scenario management part of it, and you can I've gone to scenario management. We can create a new scenario, or you can just copy an existing one and modify it. But and then we've got in here the key, if you like, drivers or levers of the business, and we have here the base scenario here, which is maybe that's your latest forecast. And here we've got a number of different levers that we can drivers. So we're now going to go to the scenario that you've created, and just switch those off for a second. So this is the base scenario just repeated, and we can say that we think that our our direct cost of sales, the cost of purchasing or manufacturing, generating electricity is going to go up enormously, and it's going to change the profile of the profitability dramatically. And here we can see that we're suddenly in years 2 and 3 making some pretty substantial losses, which is pretty well what the chief executive expected, but we've managed to put some numbers to that. Okay, let's go back to the so I'm just going to show you very quickly the data management piece. What we have pre-formatted and in our accelerator is the ability to load data from the general ledger. So there's a detailed set of instructions of how to make it work, let's say. There's the ability to load and create the hierarchies. That's sort of the product hierarchy maybe, and the customer hierarchy, even the cost center and account hierarchy. I'm actually going to show you quickly the general data load. I'm not going to actually do it because we haven't got time. But if the data is loaded into a staging table in Anaplan, and if there's any mismatches of accounts, maybe some new accounts or new cost centers, which occur all the time in companies, they'll be identified and listed here, and then you can immediately map them into your reporting in Anaplan, and then within minutes you're ready to transfer the data you loaded from the general ledger into the reports that I showed you earlier. So basically, end to end, I think the whole process would probably take most people about a quarter of an hour. Okay, that's all I'm going to do for demo today. I'm going to go back to the slideware, and we'll just briefly talk about the return on investment. But clearly, you're all finance people, and you wouldn't approve any project investment at all without a return. So we talked earlier about efficiency, and that's this sort of workload reduction one, and the reduction in costs that occurs from implementing technology like Anaplan. So we've recently carried out a study for one of our clients, and we've worked out their turnover of maybe 30 million, something like that. And just looking at the finance processes alone, we've worked out that they can save about £125,000 a year from their finance processes. And this is a really quick study we did. And that's even before you start talking about things like the speed of doing the planning, so if you like, the value you get, the credibility almost for the rest of the business by doing your planning in 4 weeks instead of 5 months. And if you then imagine that the quality of your decision making is improved by being able to focus on outcomes rather than historic numbers, and being able to run scenarios, these are the sort of percentage improvements in return on capital employed, reductions in cost of goods sold, and improvement in sales line, maybe in profitability generally, that you'd get by having this robust cloud-based technology. So there is actually a case study a report done by an external analyst called Forrester, which is on downloadable, I think, maybe from our website or from Anaplan, and we will send a link with this seminar after the seminar if you request it. Finally, a quick case study just to prove this stuff works in the real world. So this is SUSE, which is $500 million plus turnover technology company. They came to us in November 2019, and said they wanted us to help them with first of all their financial processes, and we implemented a 3-year plan in Anaplan in about 6 man weeks, starting in mid-December, and then on about the first week of February, acknowledging there was a little bit of holiday in the middle for Christmas and New Year. they were able to discuss the first draft 3-year plan in Anaplan at their board meeting in the first week of February. They were very pleased with that, and they moved on and said, well, we need to do, another big issue that the sales director's got is revenue forecasting. He had 50 or more account execs spread all over the world. He was reliant on them sending spreadsheet data into a central team, telling them what their sales forecast was for the next 3 months. What we did is connect to their CRM system, pulling the latest opportunities status from their CRM into Anaplan. And the sales director is now able to see, if he wishes to, a daily update of the sales forecast, of the latest sales forecast. He was very, very pleased with that and said, okay, let's use this tool as well for my other nightmare area, which is managing targets and quotas. And obviously the latest revenue forecast has an impact on that. And that we went live with that in autumn of 2020. And that obviously needs the latest sales forecasts. And from that, we moved on to commission management, and they have a very complex global incentive management process with different commission structures or different account execs and countries and stuff like that. And we're in the process of testing and going live with that around the world as we speak. And of course, those last few are very much sales requirements, they're operational sales requirements. Meanwhile, finance has been pretty busy trying to roll out Anaplan into its other finance processes. So they've got the 3-year plan. Towards the end of the year, they realized, they knew they needed to refresh the 3-year plan with the first year, the next 12 months budget, which they did in the beginning of the year. And they're now busy incorporating the monthly financial reporting into the system. And this really is what I would call connected planning. So all of these modules, let's say, use cases are all joined up, and anything that's needed by the next one can be pulled in real time and modified in real time as required. They're very pleased with the outcome of this. Okay, that's me done. I can appreciate we're pretty well out of time. I'm going to time for questions and answers. I'm going to hand back to Spiros.
Yes, Steve, thanks very much for that very, very informative presentation. I mean, you've shown that in an environment where we operate in now, where change is a constant. Obviously, making quicker decisions and speeding up financial planning processes. It's traditional methods, as it were, are maybe no longer fit for purpose. And we're here to help organizations really move up that maturity model that you showed. As you said, we're pretty much out of time. I can't see anyone has asked any questions. If you would like to ask questions, then please feel free to reach out to myself. My email is there at the bottom. And with that said, I think we're right bang on the half an hour. And I'd like to thank you for your time for joining the call. And I'd like to close the call now. Thank you very much and have a good day.